Good morning, everyone. One sec, please. All right. Good morning. Good morning. So we got a stall in the upward momentum. Well, actually, it started day before yesterday, but yesterday, if you guys got the video that I sent out later in the evening, and I kind of referred to it as I did in the room yesterday, as the market being in a coma, which is pretty much what it was like, as things just kind of jiggled around a bit in a narrow range. And you can see the S&P right under that 200-day moving average, which is an obvious place where prices typically stall, and why we look at the 200-day as a reference point, because everyone else is watching it, and especially on an index like the S&P 500. So now we'll see where it goes from here. But we do have at least an initial break of some support, whereas, pre-market, what we had most days was this sideways move or maybe a little bit of a down move, and then it kind of worked its way higher. And I'm just kind of playing around here to see what kind of lines I can get, and that looks a little better. Anyway, so we have this retest, and now it's broken some support, and so we'll now see where it goes. This is the factory work that we talk about. Right? We get prices are in an uptrend. They reach some reference point like the 200 here. The price resistance was up in this area. However, this begins to create resistance as a reference point on a retest. Now it's broken. And so this creates a bias that prices should move lower to the next reference point, meaning down here. Now, that's not that far away, but that's what we have. And, it's an area, whether it's here or here, whatever it might be. The assumption is that once it breaks some support, it goes down to the next reference point. So but now, because of where this is at, that 200, and because of, how long it's been moving up to get here, and the internals, which we have reviewed in prior days, the assumption is that it could have a bigger correction. So what I'm explaining here is how we begin to create a bias of what's possible in the future. And to that meaning is, well, is this level right here, which is, right here, these overlapping bars, concept from MTS, overlapping bars in a higher time frame is going to look like a base consolidation in a smaller time frame. If you guys haven't taken that course or the swing course, you can't even imagine what's taught in there. So a little plug for that. But what I'm explaining to you here right now, how to understand price action between multiple time frames like that, is explained in detail there. So with this being where it is and where it's moved to and so on, while this is an obvious stopping point on the way down, in theory, based on what it's explained, it should go through it. Now, with that in mind, we wait to see what actually happens. When it gets here, does it rip right back up there, or does it go sideways, where we talk about sideways price action at an area of support after a move down being bearish and opening up the potential for the next move to the downside. And it becomes step by step. So let's back up a little bit here. With all that being said, this is still an uptrend, right? And no connection here as far as trend lines. I'm just pointing to the fact that the trend is up as it's moved up. And so now, once let's just say it gets here, the expectation would be an attempt to move up. Now, if it should stop here, right? If it should stop here, right, a pattern that will often happen, I'll explain the thought process behind that. In an uptrend, and this one has been pretty strong, obviously, Buyers have been aggressive. So a very shallow pullback that is bought, meaning maybe it just stops here and it reverses and comes right back up. Within the context of this pattern, as I've explained, it often will result in an M top. So we're getting a little far ahead of beyond what today's probabilities are, but I just wanted to throw that out there for some food for thought for the future, because we will be talking about it depending on how this all progresses in the next days and into next week. So for today, just based on this, we're looking for some lower prices. So I'll be looking for stocks that are weak and potentially to go down. There are some, we can see here the ones in yellow and red are gapping down. So, I'll take a look at those. Dan's going to look at some gappers, and we'll see what opportunities they have for credit spreads, intraday trades. And, as we're up into this area here and internals, so on and so forth, it opens up the potential, which hasn't been, for some time, for short swings. But we'll see how that all shapes up as we get to that. Let me switch here. Qs, same story here, up at the 200, but closer to resistance. Now, this has already declined to some support intraday, but the level, the more significant level is down here. So as I said with the spiders, even though this is at support, and you can already see that buyers are reacting to it and starting to buy here, based on the daily chart and the break of a prior day's low, it suggests to me that prices can work down here. So we're going to see what the reaction is over here. Does it go sideways versus retrace and then come down to this level? Now, after this level, there's very little to stop it from waterfalling down or trending down. We're not there yet, but this is, again, we're setting up a bias as to where prices could go. If this, then that, right? That's how you have this factory type of work in your thought process of having a method, as I'm explaining it, and then it becomes like that, sort of like how a programmer programs an algorithm or whatever. It's like, okay, if this, then that, and if that happens, then this. So we set these things up so that we don't have these random thoughts in our heads about what's going on in the market. And if it doesn't make sense, well, then if that, we sit on our hands. So we have, what to do if something happens along the way. So same story here, not at the 200, below the 200, but stalled, and so we'll see how far this corrects. Transports, same story there, a little sideways action. Diamonds got above the 200, okay? So this showed relative strength. So now the question is, I know it's a subjective reference point, but you see the stall there, so there is that price support. And the thought of, well, if the 200 was resistance, now it should become support. Well, is there any real support there? Well, in this case, yes, there is. So respect it. So a pullback toward that 200, expect buyers to show up. Futures, and we can see, this is a 24-hour chart, the move down that's begun where we've got some break of price support. Trend here is still moving higher, so expect buyers to show up probably somewhere right around here. Well, you can see where it stalled right here, and now it's gone below it. NASDAQ futures are coming down to their respective level. It's a little buying initially, so we'll see how that shapes up. This does have the look that it should be able to come down into this area, but if we should get some intraday rally here that, where prices move back up again, just keep in mind the potential for an M top. And also remember that M tops that take out the prior high Right. And let's see if I can get that out. To take out the prior high marginally and then turn down are much more potent as a strong signal that prices will move lower. And all of this bearish type of thought process patterns that I'm focusing on here is because of the extent of this move, the resistance, and the internals that we've already covered in prior days. And same kind of little pullback. That's that support. Bonds here. And a little trading range building up there. Not really anything to do. And oil correcting a bit more toward this support level. And you see that buyers did try and step up. Well, they did actually stepped up yesterday at this level. And so just whether it's oil or any stock, if we were going to trade this, some of what I would be looking at is, well, after this resting period, why didn't it go higher than it did? And after this bottoming tail bar, why didn't it take off? So there is some hesitancy amongst buyers here to be more aggressive, where they were very aggressive here, and now they're kind of shying away. I was kind of, what's it going to do here? I'm not so sure. They're stepping up here, and if they don't get it going soon, right, it's going to open up the door to a further correction. And gold kind of doing what anything would do within an upward move, and the extent of this pullback. We discussed the relationship between the dollar and gold yesterday in the room. So you want to keep an eye on what the dollar's doing here. So far, gold is holding up pretty well. And I don't know if Borg is in here, but a few days he's asked me about 6E, the Euro futures. And if you had listened to the analysis yesterday and shorted this, you'd be making a nice amount of money on this move down that occurred. That was the bias there. So that's where the markets are at. That's the bias for this morning anyway. We'll see where it all goes. And we'll update here in the room, obviously, as it all unfolds and what we find. All yours, Dan. Is gold too late to short? Well, what I would look for here, trader, as a short is all right, let's assume because the dollar is moving up here, we're going to short gold. From an intraday, it is too late because now it's stabilizing. What you want to look for here is if this holds today, and you can see, well, let me back up a little bit. There's always this multiple time frame thing. And, when you say, is it too late to short, anybody in the room to say, is it okay to do this? Well, what is your time frame? What is your bias? You're looking for a day trade. You're looking for a swing trade. You'll get a different answer. So for a day trade, I'd look for a short setup here. If things started to roll over, this is an hourly chart. I'd see the reaction here, and then flip to my 5. For a swing trade, I would look for this. Let's assume this bottoming tail becomes one, and it triggers a buy, and it fails, and you get a failed buy setup. Then you can consider to short it and looking for it to come down here, because that would open up the potential for a measured move, right? Which is also covered in detail in the swing trading course and the MTS course. Right? That's correct, Robert. A failed buy setup. So ideally it triggers, starts to move up, gets nailed back down. Look for your short setup. Measured move lower. All right. All righty, guys. Let's get moving here. We got 10 minutes to the open, and Dan has some stuff to cover. And let's see where things go here today.
Yep. So if we close week or even start in the morning, we will be looking to start shorting call spreads for tomorrow in whatever index ETF we like the best. Let's go through these opens fairly quickly because we have a lot of gappers. Tandem covered call, fine. AMD covered call. Weight Watchers triggered short into the close yesterday. So if it doesn't fall, then we'll leg into a covered put. LVS, put spread, KSS, call spread, X, covered call, Zulu Sierra. I'm showing a print of up 88 cents. That would be nice. We have a covered call and put spread. Urban Cowboy, covered put. MDLZ, I posted as a watch to buy over the high today, and I just sent out a text alert saying, would the bearish market just hold off? And that's it. So let's continue with a bunch of gappers here. TPR 34.75. You know the drill. You just mark it off. See if there's a price void, if it's too excessive, and that one's pretty darn excessive, and it's around this support, so it's not tier 1. MIG, I'm assuming it's earnings, but I don't know that for sure. 58 bucks. It's a big gap closer to this weekly, so I have no interest in that. USAT, ugly gap, almost cut in half, 380, way the heck down here. It's excessive, no interest. Pru and Met, I don't see this one moving. HYRE, 482, it's a bullish gap. Went up to 560, so it's already way off the high. It's a watch. If it can hold here, it might set up. Toyota, I read in the paper, it took a $3 billion charge for some things, but that's an ADR. Not crazy about it. Maybe a call spread. This is a bearish 1, 2, 3, but no price void. Gapping down to 563 though. You know, 30-minute low. ICE, 76 bucks. It's in the middle of support. Nothing to do. I posted this in the Facebook saying this is Exhibit A of why we don't trade bios. 75% haircut. Well, now more than 75. Look at that. You wake up 22 bucks and now it's under 6. Remember, I say it's not our bag, baby. 91 bucks. Bearish. Wow, look, that was to all-time highs. An ugly gap from all-time highs is not good. We'll keep an eye on that. It's not tier 1 because it's on support. 189 and change. That's bearish. It had a greater than 100% retracement here on the weekly. But it has price void. That could set up. Here, I'm going to put that one in a little window here. Pop a mic, $2, whipping around a lot pre-market here. You know, still sell set up on the weekly, but it's a bullish gap. MPC, 67 bucks. Wow, that's fairly flat for earnings. It's a reverse head and shoulders on the weekly. See left shoulder, head, right shoulder, 100% retracement and breaking out. That was actually a bullish weekly right there. I'm gonna put that in the window here. MPC, Goodyear tire. I don't like the way it trades. Looks like junk. Grub getting whacked. Very bearish gap. That's going in a window. Very bearish. Ouch. Look at that. And I mean, these were prints instead of just waking up to be a big old gap. Goose. I don't know what to do with it. Cow. This is Chrysler. Bearish gap, but it's excessive. NOV. Bullish. That's a bullish daily. You know, you had a couple breakdown failures, gapping up to 32. That could be a day trade. I'm going to put that in a different window. That's a nice setup. Capra, 53.50. It's gapping the resistance, nothing to do. MetLife gapping down 43.55 with a price void. That looks good. That's going in a window. FEYE, 1621. It's an excessive gap. EFX, I can't tell what it's doing. iRobot, 101. It's a very bullish gap, but it's excessive. CMG, 44 bucks, 570. Do you remember when this thing was getting killed? Oh wow. I remember this day. That it's a, you know, it's weird looking, but it's a reverse head and shoulders. But this was when they had the E. coli scare that set the low. Exactly. But that's fear, right? You know, you just wait for it to capitulate, but no setup right now. NTR, 51 bucks. I don't like the way it trades. It's a bearish gap. You might get a day trade, but remember, I want to weed out 59.60. This looks lower. Nice sell setup. That's quality. That's going in a window. Do you all see how we filter these into our best looking gap candidates? Tomas, about 68 bucks. Nah, nothing to do there. Might get a day trade. It's holding well pre-market. So this is downtrend, sideways trend, broke out, consolidation. That's a bullish 15-minute chart. Here, 1755, a bullish gap, but it's just a crazy whippy pattern. I got no interest in that. Twitter getting whacked here to this prior low, 30-minute low. It looks like it can go to 29 bucks. I'm going to put that in a window. NXPI had earnings, 87 bucks. Bearish gap, maybe 30-minute low. This is in the big news, the merger. STI. Wow, that's a bullish gap over this weekly resistance. Look at that. Wow. And it's actually rare for both companies to, yeah, they're regionals. Yeah, well, look, absolutely. I mean, look at the KRE ripping up. BBT, 51 bucks. It's a bullish gap from this consolidation, but it's kind of near its destination. It's a resistance. Less than a minute to go. So here's KRE, 55 bucks. Yeah, but you need a pullback because now look, it's straight up on all these 15-minute bars. But yeah, that's adding life to regionals. That's for darn sure. I see the market's weakening here.